Welcome, everyone. Thank you so much for joining us in part 3 of our Mastering Applied Epic Reports webinar series. This is the final session in our series and will be focused on accounting reports. Woohoo! We are glad you're joining us today and are excited to be sharing today's content. So for those of you joining us for the first time today and you're not sure about what Kite Tech is all about, we are a managed IT service provider and consulting firm serving independent insurance agencies and other businesses around the country. We have been around for more than 30 years now, and what sets Kite Tech apart from other IT providers is our expertise within the insurance industry. Many of our staff have previous backgrounds in insurance, giving us that extra insight on what agencies today require to operate at a high level. We find that many agencies underutilize Applied Epic and don't take advantage of many of the features that it offers. Our agency consulting team focuses on helping agencies use Epic more effectively so they can get the most from their investment and improve their performance. Also listed here are some of the IT services we offer. If you'd like to learn more about our IT or consulting services, please send us a message through the Q&A panel and we'll be sure to reach out to you. Now let's meet our presenters, which is me and Buffy. So I am the director of agency consulting with Kite Technology Group. Been around for quite a while now, since almost the inception of our agency consulting department. I work with agencies across the country to help migrate to Epic, optimize their utilization of Applied Epic, and find those sneaky accounting issues that you might have and help you fix those. I also help agencies with employee training, creating reports, and all kinds of fun stuff. I do have a pretty long-standing background in insurance as well, so I feel your pain when it comes to understanding how things work, learning what's best, and how to use things in Epic, because we've been in the trenches. So I'm going to pass it off to Buffy to introduce herself. Buffy, go right ahead.
All right. Thank you, Lauren. Hi, everyone. I'm Buffy Johnson, and I have been with Kite for over a year and a half now. And before Kite, I was the Epic Accounting Administrator for an independent agency. Before I started insurance accounting, I worked many years in corporate accounting, specializing in general ledger system management, auditing financial statements, and financial reporting. So I've been doing debits and credits for longer than I'd like to say that I've been doing. But here at Kite, I specialize in accounting support and training and cleanup for our clients, as well as outsourced accounting entry. So back to Lauren.
Thank you, Buffy. All right. So let's talk a little about today's agenda. In this session today, like our other sessions that we presented on reports, we are going to go over the areas in Epic for the reporting for accounting, mainly transactions. We'll go through some reports that actually are not accounting reports, but they're very helpful for auditing transaction detail and policy information. We probably talked about those a little bit in our previous sessions, but we want to make sure we tie that back out to transacting. Of course, we'll talk about our general ledger reports and a couple of reports that can help you research issues on your own. Again, as a reminder, we'll be going over this at a high level. Our goal today is really to help you understand what reports are available, how are some ways that you can use those specific reports, so that you can take that information back to your agency and implement it there as well. We will be doing answering some questions throughout our session today, but please keep in mind we won't be going into the nitty-gritty detail of layouts and criteria and things like that. We do have an upcoming session that's our very famous popular small group consult. So if you'd like to get specific questions answered, if we can't get to those today, please feel free to join that session. We have two available in July, on July 11th and the 24th. So be on the lookout for those. A little bit more small group, one-to-one kind of sessions there to get your questions answered. So all right, let's jump right on into everything then. We would like to start, of course, with our transaction reports, because that's where a lot of our accounting detail comes from. So when it comes to transaction reports, just like your other main areas of Epic or your other main report sections of Epic, there are certain information that you can get from these reports that you can't get in other main report sections. There's a lot of information that you can't combine with a policy report when it comes to transactions and vice versa. Same things with an activity report. A lot of information in an activity, you can't combine that with a transaction. So you definitely want to keep that in mind when you're looking through these reports. Those areas and data that you can pull from are going to be in that transaction screen, and then some limited areas of policy information. So some of the reports that you can get access to in the transactions area specifically would be details regarding commissions, both agency and producer broker, your premium payables or your agency billed items, those things that are due to or from the carrier or broker. You're also going to be able to access information for government payables, as well as your aged receivables and production reports. So we're going to go over a little bit more detail on what those reports are going to entail. All right, so as far as receivables are concerned, we like to go through this one first. I joke all of the time that ever since I went on Epic years and years ago, I like to still call this report the aged receivables report. And a lot of folks still say my ARs. I remember when I first started out, I would just change the name to aged receivables just because we came from TAM and went to Epic. So I was like, we're just going to call it the same thing. But your AR in Epic, of course, is called your aged outstanding current balances report. So this report is one of the ones that's vital to the agency in identifying amounts that are due to the agency or back to the client themselves. It's really important to stay on top of this report because it can easily get out of hand. You're going to see things like your balances with aging detail. You've got your 0 to 30, your 31 to 60, your 60 to 90, and so forth. So it gets really concerning if you have things that are over 90 days, because those items you really don't want to hang out on your receivables. And you want to make sure that if there's credits due back to the client, you go ahead and handle that pretty quickly. And if the client owes you, obviously you need to get your money, right? So we got to get paid. Another thing that you can use your aged outstanding current receivables report for is to manage credits and debits that need to be applied. So in this report, and I'm just going to grab a quick review of this one. We're just going to run this report out of the box. Typically, this one you don't actually need to modify your criteria on very much. The default criteria is really good, so we would recommend sticking with that unless you're looking into any different scenarios, time periods, and such. But when you preview your aged outstanding current balances report, the benefit to this one is that you've got that aging and you can see where there are debits and credits that have not been applied. Now, we're also going to talk about an unapplied cash credit report that's available to you, but unfortunately that one only shows credits. So when you have those scenarios where you've got some ins and outs and you need to see what actually needs to be applied to what, this is a great report to use for that. There are lots of different ways that you can modify this report. I have folks ask all the time, can I sort this by producer? Sure. Can I sort this by servicing person? Absolutely. Can we separate it out and send each producer their own report? Absolutely. So there's lots of different things that you can do with this report in the criteria and layout. You're not stuck with just the way it looks right here, but this is basically the out-of-the-box layout for the report. Of course, you're going to see things like your pre-bill as well, those installments or things that are due in the future. And then you get some nice little totals down at the very bottom. A lot of folks like to total it by producer or by whoever they're sorting by as well, and you can do that also. So that's your AR report. And if you look a little bit further into receivable type reports, you've also got your balancing current receivables. I did not mention previously, but your aged outstanding current balances report, once you have applied all your debits and credits for the month, it's a great month-end report to run and keep on file, of course. Balancing current receivables as well. to ensure that your receivables are in balance. Some folks actually, Buffy was telling me yesterday, she prefers the balancing receivables report versus
Yeah.
the always using the aged AR report. So I'm going to bring that one up. So Buffy, tell us why you like the balancing current receivables report better.
Well, since I'm a general ledger person, first and foremost, I like to see that the report ties to the GL. And if it doesn't, then I know that there's something that needs to be done to make sure that they are in balance. And secondly, the kind of another difference between these two reports is the aged report is based on your AR due date, whereas the balancing report is more accounting month driven.
Mhm.
So, and then just this layout, it still does the aging in there for you, as you can see here, but it also, does the balancing as well. So pretty much the same information as long as you're looking at the same, due date, accounting month. But it still will show you what's still outstanding that's owed from the client.
Absolutely. And that is a very important note to make is that your accounting month is very important when you're running a lot of these reports. If you're basing it on your current default month and you haven't changed your month yet, you may run into some conflicting information. Just happened to be earlier this week. I was looking at this report and I said, well, I don't know why, because we should be, we're in June, right?
Yeah.
So what we found was that we hadn't switched the month over yet. So running the report through current default for May was not giving us the information that we wanted. So you do have to be very careful when you're running your reports, especially when things like the balancing receivables or your aged outstanding current balances, a lot of those are based on the current default month and your age date through today's date. So it's very important to be aware of what date you're running those reports. All right, excellent, very good. And so I mentioned also the unapplied cash credit report. Now, this one's not just for looking at items that you can apply to debits and credits at your client level, but it's also important for other areas that may have unapplied cash or credits. So if we take a look at that report, this can also be used, scroll down here a little bit, to take a look at things that are direct bill commission. If you take a look at your cash credits criteria right here, you can see things like credit transactions, those endorsement things that are hanging out there, or receipts of commission, direct bill commission, premium payables, all types of different options here. So a lot of folks over the years I've noticed have used this primarily for what credits are sitting on a client's account. But you can absolutely use this to expand out a little bit further if you're researching things like why is this specific, transaction or commission statement not being reflected as paid? Well, it may be that there's a credit hanging out that hasn't been associated to that statement, so that's what's causing your issues. Also very helpful for researching out of balance situations. So keep an eye on this report.
Yeah.
Buffy, anything to note on this one? Because this is one of Buffy's favorites too.
Yeah, I love this one. And I will say that at my agency, we did not use this report much. But once I've learned about this report, it is a great tool to go in there and try to make sure that everything is ticked and tied together. And as you can see, you can run the different criteria. If you just wanted to look at your direct bill commissions, you could move everything else up and just focus on that, or just whatever you were wanting to just kind of focus on at the moment, or you could just run it for everything. And then hopefully if your data is pretty clean, you're not going to have a long report. But if you run it for everything and you see it's multiple pages, then I've got some applying to do. So it's a great report. If you've never run it before, to start with, just to kind of see where you are with applying things in Epic.
Absolutely. Very good. And so another thing to note here, since we're talking about applying debits and credits, is when you're running any type of transaction reports or general ledger reports, it's also really important to understand what your accounting methods are and how those work with transactions in Epic. You can find those if you navigate to configure an accounting and accounting methods. And in that area, if you run a report, we'll look at some that are even more important for this information in a minute. But if you run a report that's based on your accounting methods, it's going to be looking at how things have been posted based on the accounting method. So when you have things like agency and direct bill accrual, that means essentially when a transaction's entered, you're going to accrue that income based on the effective date of the transaction or the bill date, whichever one is later. And so with this method, if you're looking at a report, you're set to accrual, you've got transactions entered, it's going to be dependent on that information when you actually earn that commission. With your producer commissions, you actually have a few more options, a little bit more here. You have fully paid, which means they're not getting paid until that transaction is reflected as completely paid by the client with the agency bill, or fully paid by direct bill processing. And then you also have partially paid. So with the partially paid method, let's say a client has $100 bill and the producer should get 10% of that. Well, if they only pay $50 of their bill, the producer's only getting 10% of that $50, not of the full 100. But it does allow them to earn that money as the client is paying, if you have any weird, odd type of payment arrangements on a fully paid transaction. And then, of course, you have the accrual method. Works the same way for producers and brokers as it does for your agency. So if you are on that accrual method for producers or brokers, they're going to earn that income as those transactions are entered, regardless of whether or not it's actually been paid. So always keep that in mind when you're running these reports. So let's say, for example, we go back to our general ledger reports, and if we were looking at unapplied cash credit or our aged outstanding current balances report or the balancing receivables, and we see that there are debits and credits that need to be applied to each other. If your producer is on that fully paid or partially paid basis and those debits and credits are not applied, they're not getting paid until you apply the debits and credits. So if your producers are on that fully paid basis, or even the agencies on that cash basis for agency bill income, it is absolutely imperative that you stay on top of your debits and credits so that everybody is earning as they're supposed to. So you may run those reports a little bit more often if you've got cash basis in any of those areas. All right. So then we also have a write-off report. So if you need to review the balances that have been written off of your client accounts or your premium payables or your direct bill, that one's pretty straightforward. If you're looking to see what makes up that balance that you have written off in any of those GL accounts, you can certainly report on that information as well. You can also use some other general ledger reports for that, but we'll get to that a little bit later. Spoilers. Yeah. All right, so let's take a look then at our premium payables report. And I do see that we have a question about premium payables. So we'll go through some of these reports first, and then we'll tackle that question that you have, Shine. So in your premium payables reports, you have a couple of different options here as well. So your account current report is going to basically show the detail of what the month-end journal entry is that's moving dollars from your receivables over to the premium payables. So a lot of times agencies are looking at those accounts and like, what is in this MJE? So if you run this account current report, it's going to show you all of those transactions that make up that month-end journal entry. And for those of you who are not familiar with month-end journal entries, that happens every night. It's scheduled to occur every night, and that is what moves things in the background when transactions are entered into your system. So if you've accrued income or you've accrued account current, items payable to you from the client, etc., in the background, a month-end journal entry happens every single day, and it's moving all of that information around. So that account current report is great for that information.
It is. And I'll say too, this is a great one. If you want to go and just go into one of your accounting months and look at your account current journal entry, the MJE, then run this report for that accounting month, you can see how it ties. So everything that was invoiced to your client is going to be debiting accounts receivable, unless it's a return, but typically it's going to debit your receivable. It's going to credit your company or broker payable for the net amount that you owe that keeps the commission. And then it's going to credit your commission income for agency bill, or if you're in there for cash for agency bill, it will credit an unearned income account until that client pays, and then the system will move it over. So it's just a great report to kind of substantiate your MJE for the month. If you ever were like, gosh, why does my agency bill income look so low this month? This is a great report to run to really kind of look at the detail by PPE, by client. So it's a good report to run if you're trying to troubleshoot a little bit.
Absolutely. And some of these reports do seem very similar. I mean, like we looked at the aged outstanding current balances a minute ago, as well as the balancing receivables, and some of them look like they have a lot of the similar information. They do have different purposes that you want to review there. So then the next one would be aged premium payables. So aged premium, so these first three here really kind of go hand in hand, even down to the transaction reconciliation. You're going to see like there's just this spider web of how all of these reports can really work together and how you can use them. But your aged current premium payables is very similar to the aged outstanding client balances. This report is going to show you, we'll go ahead and jump over to that one, what the aging is of the items that are either due to the carrier or broker, or from the carrier or broker to the agency. This one is another one that you can run just with the default criteria, again, unless you're reviewing backwards or forwards at some point. But typically we just run this one on a regular basis to see what it looks like. And of course, to stay on top of those items that may be due to the carrier or broker. You want to make sure that if you've received money from the client, that you're paying that back out to the carrier, or if you've received money from the carrier, that you've paid that back out to the client. So this will show by carrier or broker, by premium payable entity, what items have been in your system for a very long time. So if you look at this report and you see that there are some things like this, that you've got a debit and a credit. This is still hanging out here just because it needs to be cleaned up. It's a positive and a negative, they equal 0. So it's just hanging out there. You need to get that one cleaned up. But if you do see that you have a lot of over 90 days, or you've got some things that are creeping up, this also shows that receivable balance. So you can see here whether or not the client has actually paid. If you stayed on top of those debits and credits, don't forget, see, spider web. So if you stayed on top of those, and that item reflects that it has been paid, then you definitely need to get that out to the carrier or broker. And so that's kind of what we use this report for. If you look towards the end of this one, it has totals as well. And this one's cool because it kind of has totals by carrier as well. So clearly we owe a lot of carriers and brokers money in our demo database. We should probably
we're a little behind.
Get some folks paid. All right. And so our next one is the balancing current premium payables. So again, in managing your premium payables, but this is a different type of management of those payables. Now, there is an out of the box balancing current premium payables. This is the original, the OG, if that's what you want to call it. But there is a new version that is prettier, thanks to Applied, creating a format that actually highlights the things that are out of balance for you. Now, this report, because it has general ledger balances on it, you always want to make sure that you run your journal entries, month-end journal entries, before you run this report. Any of these reports, and I'll probably say it a few more times, that have general ledger information on them, always go run your month-end journal entries before you run the report. Otherwise, you're probably going to be out of balance and think that you're absolutely crazy because you know that it should be in balance. So we don't do that to ourselves at all. I don't know what you're talking about.
Yeah.
If you're curious about how you need to do that, you just go to procedures, accounting, month end, and you can do actions and generate journal entries to run those before you run the reports. The reason why you do that is because there are folks working in your system all day long. So if it's not right after the nightly month-end journal entries ran and transactions got entered 5 minutes ago, those are going to add up in your transaction balance, which we'll take a look at. and they're not necessarily moved with that MJE that Buffy was talking about, building up that account current and your payable balances and all that yet. So this report is really to identify whether or not the total of your transactions equals the total amount in your general ledger premium payable balances.
Mm.
So if they are out of balance, that means that someone has affected that general ledger balance without tying it out to a reconciliation of transactions. So let's say, for example, you receive net premium back from the carrier. I'm going to get down to the bottom here because I like the little highlighting thing. So let's say you received net premium back from the carrier. You applied it to your premium payable GL account, but you didn't go in and flag those transactions and associate those to that receipt of that net premium. Immediately, you're out of balance. So always when you are depositing or dispersing to or from that premium payable GL account, that's a required account, very key word there. You always have to make sure that that's associated to a reconciliation. Those accounts are in the background, month-end journal entries are happening, and that's why you get a little alert, a little notice that says, caution, if you put something in this account, you may create an out of balance situation. So it means it. There's a reason why that little notification pops up.
Yes, yes.
And so, so if you do see that you have out of balance, that's going to be highlighted in yellow on each one of these. And then, of course, at the end of this report, there's a nice little summary as well that will show you things that are out of balance as well as the difference. So this is a little bit updated from the last report, from the original report, and has the highlighting and the differences kind of pointed out for you.
Yes. So Lauren, let's go to Cheyenne's question. She asked, how can you clean up the balancing current premium payables? There are items still in the report, but the debits and credits have been applied on the premium payable area. So what would be reasons that you would still have items on this report? My first thought is it's not been associated to a general ledger disbursement. So always check. And something you can do in your general ledger reconciliation screen is to do your premium payables and filter it for unpaid. And when you filter for unpaid, then it's going to pull up all of your reconciliations that are not associated to a GL disbursement or a receipt if it's return premium from the carrier. So like here, we've got some that are unpaid. So this would be a reason why you've applied debits to credits from your client's payment, but you've not associated your finalized reconciliation to a disbursement by doing pay statement. Or, in some cases, if you have like a rush that you've got to get a check out and you're like, oh my goodness, I don't have time, I've got to make FedEx or something. I know that hopefully is rare, but it can happen. And you go ahead and enter a GL disbursement to that carrier. First, make sure that you are going to be debiting your correct PPE payable account in that disbursement. And then when you go back later, after you printed the check, but go back later and do your reconciliation, hopefully right after, then associate it to that disbursement that you created to issue the check. Just always make sure that those are tied to each other, and then it'll fall off the report after that.
Mm-hmm.
Yeah.
And I would say the last reason would be the infamous actions close without paying. You never, ever, 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 ever want to do that to a premium payable reconciliation. I know the button's there, don't ask me why. But if you do actions close without paying, those transactions will not be removed from your balancing current premium payables report.
Yeah.
You have to associate those to something. So this example here that is a $0 statement, no, we don't owe anybody anything. That's an in and an out. What you can do is go in and create a one-time journal entry, and you can use this journal entry for the rest of your life in Epic. You would just debit a penny to your premium payable GL account, the main account. Doesn't have to be specific to a carrier or broker. And then you credit that same account a penny. Finalize that journal entry and save that refer number, and you can associate that to any $0 statement that you have in your premium payable reconciliations. That will remove them from your from your balancing reports, your aging reports, everything. So that'll be the cleanup for those items. And of course, you can also flag them, if you're, unless you're generating a report and sending it to the carrier to say, here's what I'm paying you for. If you're in a carrier and you're paying a statement or paying some other items and you're like, oh, there's an in and out, you can go ahead and flag it and just leave it in that statement that you're already paying. And you've already cleared it out. You don't have to take that extra step of associating it to your journal entry. Okay, all right, so moving on through our premium payables. Let's jump back over to our presentation here. Now, we do also have a report called the Transaction Reconciliation Report. Now, this can be used for several different situations, and it's also an on-demand report. Buffy was about to remind me to say that. We talked about that before the webinar. They were like, a lot of these are on-demand reports too. Yes, we need to remember that. It's like on demand is one of those just things that you forget that you have.
Exactly.
So with the transaction reconciliation report, this report can be used to compare either the disbursement or receipt, whatever the item is, that's been associated to a reconciliation to the total of that reconciliation. So if you're wondering how you got out of balance, you run a transaction reconciliation report and you see, oh, my refer number is for $1,000, but my transactions only total $950. There's your out of balance. Possibly, or it could be something else. but that report is really helpful for locating information like that. And you can use it not just for premium payables, but really for any reconciliation. If it's government payables, producer payables, direct bill commission, any reconciliation that you're working with, you can go and use that report to identify where the errors are. Now, if you just need a report to send to the carrier to show, what makes up the amounts that you're paying, you can quickly access the same information by, let's go to some paid items. So we can see what this looks like, because it's not going to show us what we want if we don't filter correctly. So let's just go date entered. We can do a little within range here. Why don't we just go back to January? I'm sure we've put something in since then. So if you highlight a paid finalized statement, you can click on demand and you can click on that transaction reconciliation report. You can pull from just a highlighted report or just one highlighted reconciliation here, or you can go over to your reports and you can run it for several carriers or a specific time frame or whatever the case is that you're looking for. And that report is, like I said, really helpful in drilling down to what the issues are. All
One
right.
question I wanted to answer, Alina asked, how can you have the option to highlight out of balance items? And yes. So we have that report. Oh, you want to answer? Okay.
No. I was going to say, go ahead. I've got it off the list.
Oh, okay. That report that Lauren just showed, that recent report pack report with the asterisk on it for the balancing current premium payables, that does highlight when your PPE is out of balance with the ledger. And then also down at the bottom of the report, you have that summary that'll show you in total if it's in balance or out of balance, or it also will flag and highlight that PPE. And then you could also use that transactions report that Lauren was just showing if you needed to kind of dig into each one to see, okay, well, I'm out of balance with the ledger based on what I reconciled. That way you could take those highlighted items, run that little worksheet, and kind of see there too. And then there's another, and I know we'll touch on it later, but you can run a status of accounts report for that company payable, that sub account, and just see, were there any journal entries, manual journal entries entered to that GL account that could be throwing you off balance too. So there's several ways that you can do that. And we will touch on that in a little bit on like cleanup stuff and how to deep dive into looking for those out of balance situations.
Yes, absolutely. And if you do not have the reports with the asterisks, I forgot to mention this earlier, make sure you contact Applied. That means you do not have the latest report pack. So if you've been on Applied Epic for a while and you haven't recently migrated, you might not have those reports. You do have to just call and put in a support ticket and say, hey, I don't have the most recent report pack with the asterisks. They should know what you mean. Typically takes about a day for them to drop those in. One caution on those reports is those are custom layouts built off of your main default reports. So you'll notice that you see this is a default report. This is based on the balancing current premium payables default report. So don't ever, ever, ever do revert to default settings on any report that is based on another report. Otherwise, you're just wiping out all of the custom layout information that's on that. All right, very good. So moving on then, we're going to move past our premium payables and into our other payable type reports. We did have a question regarding our producer payables and close without paying questions there. Very good question, Marina. If you close your producer payables without paying, that's not a problem. But when you're going to pay them, or if you're going to like look at your balancing reports, there's some criteria in there that says exclude closed without paying. So just keep an eye out for that on your reports. And that'll help you, just kind of stay in balance and make sure that you're not bringing that information in that you really don't want to see. But typically close without paying in producer payables is okay. Unless you're automatically posting to GL, and then that could create some issues, right, Buffy?
Yeah. Yes.
Okay. But you're not, so you're good. Yeah. All right, very good. Great question there. All right, so then onto our other payables. There are some other payable type reports that you can use for balancing. You also have the balancing aged producer broker payables report. Now, this report is only beneficial and helpful to you if you are utilizing two things. One is the producer broker reconciliation. So you have to have that selected in your accounting configuration and at the producer or broker employee level or broker level to be able to pull items into a reconciliation to pay that producer. So that works just like a premium payable, which everybody knows how to do. It's just for producer payables. So it's pulling in basically a reconciliation, and you can flag those items and say, yep, I paid that producer this month. And you can tie it out to a disbursement or payroll journal entry the same way you would reconcile a premium payable. So there's a balancing report. That's just like your balancing premium payables report. And that one also includes aging. So there's two different ones. There's a balancing aged, which why would you use two if you could just use that one that shows both things? It's a really cool report. So that one shows aging and the balances. Then you have your balancing government payables report. If you are actually generating tax fees with that little button at the bottom of your transaction screen, your balancing government payables report will show what items, again, just like premium payables, what transactions total up to, and what's the balance that's in the general ledger for payables to your government entity. So, if you are paying your government surplus lines, taxes, and fees, and you don't tie those out to transactions that match, you are going to end up out of balance, just like everything else. Again, Epic is extremely connected in the background. So if you don't tie things together just right, you're going to be out of balance.
Yes.
Okay. All right. So I think
we have a question. Since we're talking about producer payables, producer commission report, Jose asked for producer commission report, what month does the commission hit? When it is paid to the broker or month, where debits to credits are applied, if different than when paid to the broker. So, I think for here too, it all depends on your accounting methods. That's something to really research and see, what your accounting methods are as to when it will hit and accrue and whatnot. But as far as, when it's paid to the broker or the month that debits or credits are applied, I mean, Lauren, wouldn't you say it's pretty much?
Yeah, so it's based on that accounting month that the transaction is actually in. So Epic is looking at, if it was paid, let's give an example scenario here. So we have a transaction that was entered today, but it's not effective until next month. Client pays it. They're not going to earn that until next month because it's not actually effective until next month. And when you're pulling in those producer payables or you're running those reports, everything really is based on that accounting month. You can absolutely pull items into like a reconciliation. That's what I love about the reconciliation is you have the option to be a little flexible there. So if you're using the PRBR reconciliation and you know that a client has paid for something that was due in the future, you can filter to open and say, just show me everything that could be due to this producer. And then in the future, you can pull those in. So if you see that there's a transaction that was paid this month, but it's not due until next month, you can go ahead and flag that and pay it, and it would remove it from your producer broker reconciliation. Otherwise, it becomes really difficult to stay on top of and on track of paying your producers out of Epic. Not to mention, I mean, how many times have I heard somebody say, this producer came back 6 months later and said, I didn't pay them for this. And we're like, well, if you're not using the PRBR reconciliation, it's kind of hard to prove them otherwise, unless you really kept good reports and you're always paying on this, this certain process that you have. The PRBR reconciliation is just, it really is the best way to manage those. And if you are also configured to automatically post to GL for those transactions that they've earned commission for, it'll create a payable balance too. So that was a long-winded answer. Forgive me for that one. But there's just so many things that are involved. All right, so let's move on then. Now, our next area that we were going to talk about that seems very popular in our Q&A is commission and production. And so in this area of your transaction reports, you've got really two different types of reports that are set up. Commission, earned commission, and producer broker commission reports are truly based on the accounting method that you have configured for either the agency or the producers and brokers. So unless you modify the criteria, and you can override the criteria just like you can in the PRBR reconciliation, but unless you modify that, the purpose of these reports is truly to show what is earned based on transactions that are entered and your accounting methods as well. This is where those debits and credits can really kick you if you haven't associated those and applied those. You might see that a PRBR commission statement is a little bit less than it's supposed to be, or an earned agency commission statement is a little bit less. So keep an eye out on that. And a lot of times that's why agencies have questions about these reports and why there's such a big difference in production and commission. The reason why is your production report is truly just based on transactions entered. And you're going to see a lot of different information on those two, even down to the transaction detail itself. So that production report, really we recommend using that for looking at total volume with a specific carrier or producer or broker, or using it to review transactions and ensure that they're entered properly. So it's really not meant to show what did I earn. It's really meant to reflect just here's transactions that are entered into your system. So if you're comparing a production report to your income statement, barring or considering you are actually following all the workflows that match your accounting methods and all this stuff, then your production report's not going to match your income statement, and it's not built to. You're always going to see that there's a variance between those two. Same thing with the earned commission or the PRBR commission. If you're not processing things correctly in your system, if you're putting a commission statement in the wrong month or whatever the case is, it's not going to align with your income statement. So we have seen that there's been variances before between those two when workflows aren't followed specifically the way they should be. And so I think that's all of our, did I just answer all of our producer commission questions? All right. So ideally though, your earned commission report is the agency-based earned commission. So ideally that report would align with your income statement. As long as you are, letting Epic calculate things for you and you're putting information in correctly, if you're looking at an income statement for June and an earned commission statement for June, your total should match. That's kind of your check and balance. Additionally, that is your backup of what makes up your agency income, whether it's direct bill or agency bill. All right.
Now, Richard does have a quick question, kind of producer related, but what report for new business by producer would you run?
Yeah, so you can certainly, it's kind of a challenge with some of these because you really want to make sure that you are, man, that's the loadedest question. That's not even a word, but that is a very loaded question. It's a little bit of a challenge depending on what your accounting methods are, what your workflows are. Direct bill commission, a lot of times when that comes in, it's not specific to a new business transaction type. It's not always going to be that specific. So if you are running a PRBR commission report, you might see a direct bill commission entered transaction or a production or a commission report, but it's not really going to show whether or not it was new or renewal business. So really we would recommend using more like a book of business report to get total volume of that information. As long as you've got your premiums and commissions entered properly, that's really going to be a better report to run to see how much business is my producer doing as new business, because that's based on a policy status, whereas your transaction reports can't always talk and deal, with policy status. And additionally, you might get a new business transaction, but it's realistically a rewrite in your agency. So again, you really can't completely rely on transaction reports for new business for your producers. Your policy configuration and that producer commission agreement should be set up so that they're earning the commission that they should be getting based on what your policy status is and how that's configured on the policy level. All right, so I want to keep jumping along here. I know I'm going to run out of time. I always do. So just so you guys all know, before we get to the end of this webinar, we will try to keep going and finish everything out, make sure we get everybody's questions answered. So if we go over a little bit and you have a few minutes to hang around, please do. If not, you'll of course get the recording. So just keep that in mind. So much information. That's why we're doing the small group consults. Come see us there. So a couple of reports. I'm not going to pull these up in Epic for time's sake, but a couple of reports that you can use that aren't necessarily accounting type reports would be your policy reports to verify that the information is correct on the policy before your transactions actually get entered. Think your agency commission percentage, premium payable, your company agreements, your commission agreements there, or your producer broker agreements. There's also policies missing a producer or broker. You can require producer broker to in your configuration if you need to. And then your policies with no transactions. There's a couple that are in Epic that are called policies with no transactions. There's also a policies not invoiced, direct bill policies not invoiced, a couple of different ones, just different layouts that are available. But ultimately, you would use that to see if you hadn't received any commission or transactions at all on specific policies. And then you also have the verified transaction commissions. Now, those are actually transaction reports, and you can see some of the same information that would be on the policy on the transactions themselves. So if you wanted to audit and make sure that your producers are getting new business commission as they should, you can review some of those transactions to see if your producer is getting the commission they should. Or do we have the right agency commission agreement on there? And even to the point of comparing what commission is on the policy to what commission you actually received if you're doing download, import, and record. So really good reports for just auditing and making sure that information is correct. One that I did not put on there was the direct bill report. And Holly, has a question about direct bill. Oh, but I think I just answered that question. Hey, Holly, I just answered the questions. I'm gonna just mark that one off. So that would be, and I'll just jump over here real quick and show you that one. That would be the policy report, and you can use either one. You've got the DB policies, no commission received. I've seen it also called not invoiced. You just have to set the criteria up in that to make sure that it's direct bill and active policies, your line status. But there's also the original that is policies with no transactions. And keep in mind when you're running that for direct bill, you want to make sure that you if you're on a cash basis and you're doing download and record and import, that you run that for something like 365 days ago through minus 60 days, because typically carriers are going to take 30, 45, 60 days to get your direct bill commission to you. So you want to give yourself a little bit of a buffer. We don't expect direct bill commission right away, but if you're running that for agency bill, you could run that up to today, because if the policy is effective today, we better have an agency bill transaction in at this point. So, all right.
All right, I'm going to answer Candace's question real quick too. She's asking, is there a report that we can use to show agency bill transactions that were entered by account managers for a certain time period? Sometimes we don't get invoices after account managers bill. So we are hoping to be more proactive to catch those. So if the account manager has invoiced the agency bill, then that balancing current premium payables report or your aged premium payables report, those invoices will be on there, but it will show that you have not paid that invoice yet. So that would be a report that you could run for that. And then if it's the opposite, like if there is an active agency bill policy that the account manager has not invoiced yet, then there's that report that Lauren showed on a previous screen, and it would be agency bill, what is it? Agency bill not transacted.
Yeah, they're the two with the asterisks are the AB policies not
Not
invoiced,
invoiced, yes.
CB policies no commission received.
Yeah.
It's exactly the same report. It's just labeled differently. So you don't have to create two. Just make sure your criteria is agency bill or direct bill.
Right, so, yeah.
And kind of piggybacking, since we're still in this area of transaction information, Shannon has a question about, should statements be reconciled in month received for direct bill or paid for agency bill, or month transacted effective? Kind of a loaded question there, but the direct bill, if you're on cash, I'm just going to throw this at a cash basis. For direct bill, we would recommend making sure that your commission statement is in the same accounting month that you received the money. That's that cash basis process. If you're on accrual, it's going to be, based on the month that you're reconciling that information. And again, when you've received the money. So really, direct bill, those things are in the same month. So you wouldn't want to have a situation where you have a commission statement for you got this month, right? So let's say I got paid today by, it's not going to be Travelers because they're always at the end of the month. Let's throw it out and say it's Progressive. They paid us today, but those transactions are all for last month. That last month is going to be on your transaction effective dates, but that is not your accounting month. You want to note that this is the May 2024 commission statement, but all the money in the accounting month and the commission statement is in this month because this is when we got the money for it. So, and same thing for, agency bill items. That should go in the month that you're paying it, really. So, good question. That'll save you a lot of issues by getting those right.
Yeah.
All right. Oh, and the last one, forgive me, Buffy, I'm going to jump into this real quick, is the direct bill. I don't know how I didn't put this one on the list because we use this all the time for all kinds of things. This direct bill report has a couple of different uses that you can use. Direct bill unpaid items is going to show you any outstanding cash on account payments that you've received. that you have not associated to a commission statement or reconciliation. It's also going to show any transactions that are on client accounts. Like, let's just say it's a renewal transaction, somebody put it on account and it shouldn't have ever been there. It should have happened over in the general ledger in a statement. Or if you accidentally bring in a direct bill download and it's wrong, so you just delete the reconciliation, that doesn't delete those transactions. So if you go to import and do those put those transactions in the right way, you've got a whole statement that's unpaid now. So that's how you can find those transactions. And an accrual agency is going to use an unpaid report on a regular basis to look for the difference between your direct bill commission receivable total and your total of transactions that are due to the agency. Also, you can look at reconciled not paid. That's going to show you those basically your reconciliations, your direct bill reconciliations that have been pulled in from download or imported or recorded, but you never associated them to a receipt or a disbursement. If you don't associate those items, they're going to hang out and be unpaid forever and ever and ever and ever, which can also have a negative impact on your earned commissions report, matching up to your income statement. So this report is absolutely paramount. If you've not run it before, please go and run that report and you'll see that there might be some duplicate stuff in your system. This could negatively affect producer commission, agency income, all kinds of things. So that's one of your find the problems reports.
Yeah, yeah, definitely.
All right. So I'm going to hand it over to Buffy now. I'll drive Buffy for you,
All
but
right,
I'm going
sure.
to go ahead and take on the general ledger because
General ledger reports,
GLP.
absolutely. Yeah. So general ledger reports, the section of reports in Epic, there's not as many reports as there are transaction and policy and all the rest of them, but these are very important reports for your accounting staff, your principals, any management that's going to be reviewing your financial statements, and especially your CPA. So this is an important section of reports to learn about and to understand. So here we have our financial reports, which are typically considered as your income statement, your balance sheet, status of accounts report, which is like the old school general ledger report that basically is every debit and credit to every GL account in your system. There's also a trial balance report that some CPAs like to have, and that's just making sure that your system is in balance, that all of your assets, the total of those equals the total of your liabilities and your equity accounts. And then also your bank recs, there are reports you can run to substantiate your bank recs or to help you with the bank rec process. And then, just basic reports that you can run for balancing, like we've talked about before, balancing your accounts receivable to the GL balance, balancing your current premium payables to those balances. For forensic review, we like to say that for that deep dive when you were just going down a rabbit hole trying to figure out why I'm out of balance here. A status of accounts report is a real good go-to report, so we'll touch on that one. And then, for your month-end process, you're going to want to run these reports to have all of your month-end reporting. And then ultimately, whether you report to your CPA monthly, quarterly, or annually, you will have that report or all the financial package to submit to your CPA for them to do your tax reporting. So lots of general ledger reports that we'll talk about, but we'll start with the income statement. A lot of people call this a P&L. Income statement, P&L, same thing, profit and loss. Basically, it's just telling you, is your agency making money? And what that report will show is all of your income accounts at the top, your agency bill, direct bill, any miscellaneous income, contingency income, all that will be at the top of your income statement. And then the section below are all of your expenses, all of your vendor expenses, payroll, anything, that is agency related, that's an expense, will go at the bottom. And then at the very bottom, you have your net profit or net loss. So are you making money? You can see that bottom line down there, and it shows it as a month and a year to date. You can also do comparisons for your income statement. So if you want to compare multiple months at a time, or a quarter. Just there are different ways you can design that report or select the criteria for it. You could even compare if you are doing GL budgets. So if you wanted to put your budgeted amounts in your system every year, you can compare your actual to your budget. So that will be on your income statement. Balance sheet, that's your assets and liabilities and equity accounts. Your cash, your receivables, your fixed assets, and then down below in the liability section, it's going to be all of your payables, whether it's company, broker, producer, payables, any other like loan payments, anything like that would be down there in that section. And then the equity section is basically kind of the overall health of your company. It just shows how much equity you have in your agency. And then your trial balance, there's the old accounting formula, assets equals liabilities plus equity. So that's what that report will show you. All right, so next, let's see.
Sorry, I'm clicking and it's not getting there.
Oh,
Oh,
no. Okay.
this is our favorite report.
Yes. So status of accounts. When I first started in Epic, I think it was like my first day. I was like, I want to run a GL report for like a GL account balances. And I was like, this isn't what I'm looking for. And stumbled across the status of accounts. I was like, that's what I'm looking for. So status of accounts is kind of another name for your old school general ledger account, general ledger report. It will run, you could either set it to run all of your GL accounts at one time, or if you're just wanting to select one or a few of your GL accounts, and you can have it where it's just a specific accounting month that you're running it for, or you could have it for a range of months or open through your current month. And that basically will show you all of the detail of that GL account. It would be all of your debits, all of your credits. It'll be, and it breaks it out. You can see in there that it is broken out by disbursements, receipts, journal entries, MJEs, the month-end journal entries, vouchers. If you use vouchers, they'll be in there as well. So it's a great report if you were trying to figure out of balance situations or just kind of see what has hit that account this month on your income statement. If you're like, what, why? Why is advertising so high this month? Then you can drill down into this report and run your GL account for your advertising account or accounts and see the detail. What all was paid that month for that account. Or it could be that you could see if something was accidentally entered to that GL account that actually belongs to another account. So you can identify where some cleanup needs to happen, where you would need to reclass that to a different expense. So as Lauren showed this here is just a picture of your status of accounts of your income by PPE. So basically it shows you like your 4010 would be your direct bill income, your progressive sub account for that. And then it would just show you like below the R for the receipt, it'll show you the receipt number. So if you wanted to go look up and say, what is that receipt for? You can go to your GL receipts and type in refer number 170 and pull up that receipt and see what was entered there. So this just is very, very detailed information of what flows through all of your GL accounts that builds your financial statements. Just a really good deep dive report. I advise everybody to make sure you're really using this. And then for those of you agencies that are on direct bill receivable or do cash on account, you will run this monthly, multiple times a month to kind of see where you are with if you're receiving your direct bill commissions to cash on account, for example. You will see that receipt going into a cash on account, which is an asset account that starts with a 1. And you will see the amount receipted there. And then once the reconciliation, the commission statement is entered, then you will see it move to commission income. So that's a way you can make sure that everything you've receipted, that you've reconciled, and at the end of the month, the best scenario is that balance, that ending balance will be zero. Sometimes there's a little bit of a date offset. If you receipt on the 31st of the month, but you don't reconcile it till the 2nd of the month, then you're going to have some offset at the end of the month. But that's how you would make sure that you are reconciling everything that you're receiving. So that's why we call it the general ledger report. It's just a really good report for a lot of detail. Um,
Buffy, I was also going to say another thing that you will see on this report. I just happened to run in this the other day, is that if you have multiple months open and things have happened in prior months, but you still haven't closed that month, if you don't go back and run your month-end journal entries in order, but like let's say you've got January through now open. If you don't go back and run those in order, it's not going to update those MJEs that are typically running, because now it's just running for this month. You're in this month, so it's running for this month. So if you look at your report and you say, I see a January MJE, but I don't see February, March, April, etc., that means you need to go back and manually run those month-end journal entries, and then it'll pop up on this report and reflect that information there.
exactly.
I love Jose's comment. He says, I renamed status of accounts report to finding stuff.
Finding stuff. That's right. Yes, there you go.
The holy grail of your GL.
Yes.
We've got a couple other little funny things that we say, but we don't want to, offend anybody. Awesome. All right. So we'll move on then. A couple more here. We did have some questions already about a couple of these, so I just answered those in the background.
Okay, perfect. Very good. All right. So balancing and researching issues. The general ledger register, that is a report. That's kind of that first one that I went to when I told you on my first day. I was like, I thought that was the GL report. But what this is if you are looking for a specific debit credit relationship transaction, like if you enter a receipt or a disbursement, if you run this report for that, it'll show you what the offset was. So this is kind of another good report where you can see, like, for example, for your vendors, if you paid a vendor out of your operating account, you could run it for that bank account, and then it's going to show you by disbursement what vendor you paid for it. So it'll show you the expense side of it. So that's a good report if you're trying to find both sides of an actual transaction.
Or even the breakdown of those different items, because a lot of times, we're looking at the status of accounts, and then we go find the refer number, and then we look at it, we open it up, and that's like 25 clicks. I know I'm over exaggerating, but if you run that general ledger register, then you can see everything just right there. If you run it for an accounting month or whatever the case is, whatever you're looking for, you can see everything all in one layout instead of having to go to each item and finding those things individually.
Yes. Yeah, absolutely. And your deposit register. So for example, with this, if you have a bunch of checks that came in, and you are putting together a deposit for the bank, you've got it all on one GL receipt, and you've entered all of those checks, all those clients, or all the commissions on there, then you can, it's one of those on-demand reports as well. You could create the deposit register for that GL receipt, and it'll show you a breakdown of all of the checks, and you could just print that and take it to the bank as your support for your deposit. So that's a really good one to see what all makes up a particular GL receipt. And your journal entry report, this is one of my favorites too. You can see all of your debits and credits that you have done in a journal entry or an MJE. And a lot of those MJEs, like your account current, this is where you can go to see what the system debited and credited with those MJEs. You just type in the refer number for those, and it'll pull up all the debits and credits for that month. And depending on your configuration, you could even have like your producer commission. You would see the MJE for that, where it's debiting your producer commission expense and then crediting your payable. Also for your the cash on account, you have an MJE for that. So you can see a lot of detail of what the system is doing behind the scenes by going and looking at these MJEs and opening them in your general ledger. Or running a journal entry report for those. Also for payroll, that's another place where you would record your payroll, is through a journal entry, a manual journal entry. So you could run your report to see what your payroll entries are. And also if that's where you do your credit card payments, some people do them through journal entry. And that's another report you could run to substantiate that as well. So this is just good detail to see those manual and system generated journal entries. You can run a report and see what those are, or just you can go into the journal entry section itself in general ledger and see all the entries there too.
All right.
All righty.
So I think this might be almost the last one. And
So
these
our
really are pretty straightforward too. So, but we like to go over them.
yes. So bank recs, very important to do at the end of the month. And this just makes sure, and y'all all know the importance of the bank recs, and I'm sure your CPA is saying, I need the bank recs, I need the bank recs. This is making sure that everything that hit your bank, all of your deposits, and all of your payments that hit the bank are recorded in Epic. So you're reconciling the two. Your bank rec detail, this report will show that there's, in your current reconciliation that you have outstanding or flagged items out there that will match your bank statement. If you need to send detail to your CPA or CFO, this could be a detailed report that you could send. Or if you just, wanted to have it, old school, if you print things and you wanted to print it and just attach it to your bank statement, that's the report you could do that with. And then you also have your worksheet where, you could also use this as just kind of a way to see what has been entered there, what is out there, that is on your bank rec that you will be reconciling. So just two reports that you could use to help you with that process. Some agencies, just go straight to the bank rec and then we'll just go start checking boxes and reconciling right away. But this is a way too that if you've got a lot of detail or if you're trying to find something, you could run these reports and that'll help you with that process as well.
Yeah, and the bank reconciliation worksheet really is better in Excel. It's really what we found.
Yeah.
If you know that you're still in a place where maybe you're having a lot of adjustments that are occurring, sometimes things get stuck. I'm just saying in Epic. So that's kind of your backup to generate that out. You can highlight all the things that you want to highlight, but you're not stuck with, I have to delete this whole reconciliation and start over again to go find something that I can't get to pull in for whatever reason. And that's also where the bank reconciliation detail is helpful. If you did happen to start that bank reconciliation and then you went and adjusted something and you just can't get it to pull in, I did do that the other day. This is exactly why I used this report. I generated the report because there were already so many things flagged, so I could delete the rec and then, pull it back in again. There you go, magically pulled my transaction in that I needed it to pull. And and when I did that, having that report, I could go back and check the items that had already been flagged before I had to delete that out. So that's a great one. And there was a question earlier about how to find outstanding checks that haven't been cashed. Both of these reports are good for that information.
Yeah.
Obviously, the bank reconciliation detail, if you haven't, that's for an open bank reconciliation, but the bank reconciliation worksheet is what you would generate to just see what's hanging out there. So this is considering that you haven't really started a bank reconciliation yet. You just want to pull the information out. So you can search for those different items. All right, so we really appreciate, as usual, everyone for joining us in our today's session. We hope that the information was valuable to you and that you learned lots and lots of stuff. I know it was a ton of information, but we want to make sure that you get everything that you need. If you'd like to learn more about Kite's IT and consulting services, please feel free to reach out using any of the ways that we've listed here. We'd be happy to meet with you and learn more about your agency's technology or your consulting needs. As mentioned earlier, we will be sharing the recording with you in a few days. Don't forget to sign up on or to connect with us on YouTube too. And of course, at the end of the webinar, you will get that survey to complete for your feedback, which we would love to hear from you and appreciate everybody's feedback each time. Don't forget, if you complete the survey, you also get entered to win a complimentary Applied Epic assessment with our awesome consulting team. Thank you everyone again for attending today. We hope you enjoyed the presentation and have a great rest of your afternoon. Thanks.
Thank you.